Okay, guys, so here's the thing. Here's one of the sad truths of what we're facing as a nation is that there is a situation where student loans can actually reduce your Social Security benefits, which it just sucks. It just is what it is. It sucks. Let me walk you through it. A really great article. CNBC made it. So it's from their website. Lori Konish. I'm tired. Basically, January 5th, 2023, a couple of days ago. Really great article. Let me go through it. Okay. Falling behind on student loans can reduce Social Security benefits by $2,500 a year. Let's talk about this real quick. All right. I'm going to read directly from the article. If you are delinquent on federal student loans and collect Social Security benefits, you're delinquent and you collect a Social Security check, your monthly checks could be reduced. A pandemic pause has put all garnishments on hold for now. But when collections are in effect, the reduction in annual Social Security benefits is about $2,500 on average based on 2019 data, according to the new research from the Center for Retirement Research at Boston College. Good job, Boston College. That typically amounts to 4 to 6% of the household income, a significant amount that could pay off the average person's credit card balance, the research found. Okay. The number of Social Security beneficiaries who find themselves in this situation is small. It's a small group, no doubt about it. It's based on delinquency rates, right? Less than 5% of beneficiaries currently have student loan debt. So it's a small group. And then of that, they have to be delinquent, right? But those balances are expected to be substantially higher for future beneficiaries. It's me, because I will be in my 60s with student loans with how this whole thing is coming down. Okay. So with that said, but those balances are expected to be substantially higher for future beneficiaries who are also expected to have higher delinquency rates, like me, according to the research. Among younger cohorts, the share of people holding student loans are much larger. Yeah, because, you gave out predatory loans and then the government took over. And I'm so old, I've got both the old school predatory loans and the government new predatory loans. Yeah. It must be nice to be educated. Nope. No, it's not. Among younger cohorts, the share of people holding student loans are much larger, said Sion Lui, research economist at the Center for Retirement and Research. If you are delinquent, and then whatchamacallit, my apologies. Let me get to the next thing. If that continues on into retirement, right? So if we go to retire and we still have student loans, which many of us will, then a much larger proportion of them, if they have trouble making payments, could be facing benefit upsets, which means that we're getting screwed at the beginning of our life, which then continues with us into retirement and screws us in our ability to have Social Security benefits, which means like someone like me, I wish they would accept me into the military because that would literally be an option. That would be an option, except I'm a little old for that, but that would be an option. Social Security benefits are typically subject to partial withholdings after prolonged federal student loan delinquencies. The Social Security withholding amount for student loan debtors is typically either 15% of the total monthly benefit or the amount by which the benefit exceeds $750 per month, whichever is less. Of course, mine are much higher because I have traditional federal student loans and private market student loans because I'm old enough that the federal government didn't ride in on their white horse until basically, or I guess it's a white knight, didn't ride in and essentially save all of us. And I'm the leftover. I'm like the last of the old. So it has been a real issue for people who are on a fixed income and have no other support, said Anna Minsky, a Boston-based lawyer specializing in student loan law. That's 15%. That 15% really can make the difference between being able to pay for rent or food or medication. Social Security benefit withholding typically happens after 425 days of delinquency has passed and a loan holder fails to restart repayment. Okay, so we're talking over a year of not being able to pay, 425 days. The money withheld is applied to the federal loan balances. How much money is at stake? This is the important part of this article. This is like the holy cannoli, okay? Here we go. About 2.7 million consumers ages 62 and up owed more than $107.3 billion. Remember, these are old people that shouldn't have student loans like this. They shouldn't. That's reserved for people like me, damn it. $107.3 billion in federal loans as of September, according to the U.S. Department of Education. But that's federal loans, right? The average annual Social Security benefit at risk due to student loan delinquency is expected to increase to $2,594 for future beneficiaries. Those currently ages 35 to 61, up from $2,299 for current beneficiaries ages 62 and up, based on 2019 data, according to that same center we've been talking about in Boston. However, the share of household income at risk is expected to decline. People will be making less in the future, to 4.4% for the future beneficiaries, down from 6.1% for current beneficiaries. So to summarize for you how amazing our politicians have led this country going into the future, Americans are making less, prices of items are significantly higher, student loans are not going away, and the predatory concept that they originally used, they're still using. And as these people age into Social Security retirement benefits, or even some of the other Social Security benefit options, you better believe it, it is going to hurt their ability to go ahead and receive benefits because their retirement will be reduced because they have student loans, which their entire life has reduced their ability to live. Are you starting to see why this whole forgive some student loans, forgive all student loans, whatever? You're starting to see why this is going to become more popular than any other idea out there. Today's Social Security beneficiaries who are behind on federal student loans are not subject to benefit withholdings, as those collections have been suspended, remember the whole COVID thing, as a part of the federal student loan payment pause that's been in effect since March of 2020. President Joe Biden's Fresh Start initiative is slated to give borrowers a full year after the payment pause ends to try and get out of default before collections on benefits resume. That's good. That's good. That's good. Now, how policy may influence these debts. Biden has proposed broad student loan forgiveness of up to $10,000 for federal student loans or up to $20,000 for Pell Grant recipients. Now, as you know, that amount of student loan, forgiveness is not going to even pinch the pimple. We'll put it that way on my student loans, which are around $300,000. And that's because I paid hundreds of thousands down from what they were. The fate of the plan is now in the hands of the U.S. Supreme Court, which is scheduled to consider it in February. If the plan goes through, it would result in an average forgiveness of $12,000 per borrower, according to the Center for Retirement Research. It probably won't. It will probably be deemed unconstitutional, a taking from the general population. Both Black and Hispanic households who are more likely to have Pell Grants would have their share of debt holders cut in half, the research found. The share of Black borrowers with debt would be reduced to 12% from 22%. Although keep in mind, the people with the highest student loans are white. Yet future beneficiaries in those groups are currently expected to see their delinquency rates rise, according to the Center for Retirement Research. The plan would also have a dramatic impact on delinquency rates, as the delinquent borrowers could have their entire balances forgiven. While Black borrowers tend to see the largest decrease in delinquency rates, Hispanic borrowers would see the largest relative decrease, the research found. Because Biden's plan would reduce both debt and delinquency for future retirees, it would also shrink racial inequality, the Center for Retirement Research said. It would actually create, when you think about it, more racism. And here's why. When Caucasian students went to school, especially Caucasian male, because when I went through school, women were considered a minority and they would get special programs and grants and all that stuff. I didn't. I paid full boat and then sometimes extra. And so what happens is if you forgive more for other groups, then basically the people who were charged the most, you have created a racial situation which is racist against the highest paying individuals like me. So a lot of people aren't promoting that idea because they're afraid to talk about race. They're afraid to talk about student loans. They're afraid to talk about how this program should be fixed. But that is a reality. That is a reality. I'm just going to say it. It is the reality. Some Democrat lawmakers are also eyeing another way of providing relief. In December, 4 House Democrats introduced a bill, the Student Loan Relief and Medicare for Medicare and Social Security Recipients Act, that would eliminate student loan debt balances held for more than 20 years by Medicare and Social Security disability insurance beneficiaries. Not a bad idea, right? Not a bad idea. It remains to be seen whether the proposal may gain traction on Capitol Hill. Look, if you've been paying student loans, okay, for more than 20 years, if you've been paying student loans, no matter who you are, for more than 30 years, I don't think student loans should last past 30 years. I don't. I don't. I don't think they should. It remains to be seen, blah, blah, blah. They do a cute quote, and then they kind of come to the ending. But the bottom line is this. It is a rare situation where they could, and they will, reduce the benefits of those Social Security recipients. The point of this video is to explain why these problems are going to get worse, and also explain that the initial issue has not been fixed at all. The initial issue on how much they can charge people at these colleges, at these master's programs, at these doctorate level programs, they have not been fixed. These universities keep building stadiums, new buildings, and buying more land because they don't know what to do with all their money. And all that money comes from the government. Just like these hospitals that seem to keep growing, building bigger buildings, getting more money because of Medicare and Medicaid. It's federal money funneled to these organizations on the backs of essentially our youth. A lifelong debt that when you retire and can't pay will penalize your retirement. You're starting to see like how this is just immoral. It's immoral. It's unethical. Anyways, guys, I will catch you a little bit later. One more video. This one is a little bit simpler, a little bit more relaxed, a little bit shorter. I will catch you guys in about 5 minutes and we'll go from there. Thanks so much, guys. Have fun. Bye-bye.